Oil didn't just spike, it sent a signal. In the last 30 days, price didn't trend, it destabilized. Sharp rallies, violent pullbacks. Then suddenly, plus 9% in a single session, breaking above $110. And the explanation everywhere is war. That's convenient, but incomplete. The market is pointing at US-Iran tensions. But geopolitics doesn't create a 9% move overnight. Positioning does. Here's what most people miss. Oil is not just a commodity. It's part of a monetary system. After the 1973 oil crisis, the world was reorganized around one rule: energy priced in US dollars. Surplus recycled into US dollar assets. That's the petrodollar system, which means demand for oil creates demand for dollars. Demand for dollars anchors global liquidity. For 50 years, this system has been stable. Not because it's fair, because it's efficient. But now, something is changing. Energy trade is slowly diversifying across currencies. Not dominant yet, but enough to matter. And when a system that stable starts to shift, it doesn't break quietly. It reprices violently. That's what you're seeing now. Not just higher prices, higher uncertainty in pricing itself. Look at the behavior. Breakouts that don't hold, sell-offs that don't continue. This is not trend. This is discovery under stress. Now here's the part that actually matters. Energy is not just another sector. It's the base layer of cost for the entire economy. When oil rises, transport costs increase, industrial inputs reprice, food production shifts, and then, slowly, everything you consume gets more expensive. Not instantly, but persistently. And this is where most investors misread the situation. They focus on oil, but oil is not the trade. Oil is the transmission mechanism. The real story is this. Cost pressure is building. Margin compression is coming. Capital is rotating. So what do? Not react. Position. First, stop trying to call the top in oil. You're not trading direction anymore. You're trading instability. Second, watch cost exposure. Businesses dependent on energy or imported inputs will feel pressure first. Third, follow structural allocation. Capital is already moving into energy transition, storage infrastructure, efficiency systems. Not because it's trendy, because it's necessary. And here's the line you should remember. The old system doesn't collapse. It loses control of pricing. When that happens, volatility becomes the signal. If you're still asking, will oil go higher? You're asking the wrong question. The real question is, what breaks first? Comment shift if you see it too.